Peter Churchouse. He's Managing Director of Portwood Capital, which maintains a focus on Asian real estate-related securities. Peter, thanks for coming along. Well, you know, we've been talking about Thailand all morning. Let's just, because of the election there, let's start off with a look at Thai property. Now, how's it done? How's it going to do? And does this election change anything?
Well, I think it does. Certainly the lower end of the market has done reasonably well, despite all the political problems over the last year or so. The upper end of the market, however, has been rather soft because we have seen, I think, the expat community has been in retreat to some extent. So markets like Phuket and Koh Samui, I think, have been pretty soft at the high end. But Bangkok, lower end property, very resilient, very powerful. Interest rates have been low. Domestic consumption is strong. So that sector of the market's been quite good, and I think it'll probably continue to do so.
Somebody was telling me that there's a very poor secondary market when it comes to property there in Thailand. Tell me about that.
Yes, that's correct, particularly at the high-end market, because most people who want to buy high-end will typically want to buy new. And so selling second-hand is actually quite difficult sometimes, particularly, certainly the very high-end at the resort locations down in the south of Thailand.
Now, there is certain caveat emptor here. I mean, you can't own the land, though, as a foreigner, can you? That makes life difficult, I should imagine. So how do you get around that?
Well, you're allowed to own 49% of a condominium can be owned by foreigners, but for landed property, you're right. You're not allowed, foreigners are not allowed to actually own the land, but they create these structures where 51% is held by a Thai party, particularly law firm or something like that, and so you can get around the rules by these creative structures.
Right, let's talk about overall property prices and, you know, the bubble-like state that we've been really... Well, I don't know whether it's bubble-like or not, because I think you think that the Hong Kong market wasn't behaving like a bubble, and that was in January.
Well, actually, we've still continued to see prices move up in Hong Kong and pretty much around the region. So central banks and governments around the region are really trying to cool asset prices by tightening liquidity, raising interest rates, administrative measures, and so on. Probably the most forceful has been China. But in Hong Kong, we've started to see transactions volumes have slowed down significantly over the last couple of months. We're starting to see the pace of property price growth is slowing down as well. So the pace has slowed down to about 1% per month, whereas it was running at about 3% per month.
This is China?
In Hong Kong.
I want to go to China, though, because it really depends what city you're in.
It is, that's correct. But also, I think China is more bubble-like than even Hong Kong. And we are now starting to see, of the major 18 cities in China, most of those cities are now starting to see month-on-month declines in average property prices. We've certainly seen a dramatic fall in the volumes of transactions, and now we're starting to see a little bit of weakness in the pricing as well. So I think that's going to continue into the fourth quarter, and I expect to see negative growth in year-on-year prices by the end of the year.
So government measures there, the medicine's working, you'd say? But
absolutely, it is working.
In Hong Kong, it's not necessarily.
Yes, it is. It is working in Hong Kong. We have seen volumes of transactions slow down to a much more sustainable level, and we are seeing the pace of property prices is slowing down as well. They're still up, but they're going up at a slower pace.
Tell me something. Which market in this part of the world would you look at? Would you see value and see it being attractive as well?
I think Japan looks extremely attractive right now for residential in Tokyo. You can buy property in Tokyo and get a 7% rental yield in a country where the bond yield is, say, 1.2%. That's a very, very attractive proposition. So I expect to see some of the big private equity real estate funds spending more time focused on that market right now and less on China.
Of course, and when you say Japan, it is probably the home of the mother of all property bubbles.
Yes, it is, and they still haven't recovered from the bursting of that bubble in 1990-91. Prices are still down 70 or 80% in Japan from that period. So we've seen a little bit of recovery in the last few years, but again, that recovery has stalled in the last 12 or 18 months.
Anywhere else?
I quite like some of the distressed situations in places like Australia and New Zealand. Something like 35 financial institutions went bust in New Zealand, leaving behind huge swathes of real estate-related debt. There are some very interesting propositions there, quite small in terms of scale. You can't put a lot of money to work, but quite interesting distressed situations.
Let's move to commercial property, if you would, and I'm going to again look at Hong Kong, because we see rents going up the whole time, and I'm not going to mention the shop here, but there is one which is something like 10 million Hong Kong dollars a month rent that somebody's paying.
That's correct. The situation here is it's not going to get any better in the short term because there is no supply of office space. For example, Hong Kong typically absorbs about 3.5 million square feet of office space per annum. Over the next 3 years, the average production is less than 1.5 million per annum. So as long as we have a reasonably robust economy, demand is going to remain reasonably firm. Rents are going to keep going only one way, and that's up. So that's really a bit of a danger for Hong Kong in some respects because it lessens Hong Kong's competitiveness as a financial centre simply because it's getting very expensive.
And what about commercial property elsewhere?
Singapore is recovering. Singapore has not got such a tight supply scenario, but what new supply is coming on is actually being absorbed. The Singapore economy is just buzzing right now. It's really humming, and I expect to see commercial property in Singapore continue to move up. Maybe not as fast as Hong Kong, but still do very well, and I'd be certainly looking at investing some of those commercial property stocks down there.
Overall, let's just take a look at real estate in Indonesia, Philippines, those parts of Southeast Asia.
Basically, the low-end housing market is doing well pretty much around the region. There's plenty of finance available. There's no shortage of available mortgage finance. Interest rates are relatively low. So it's really actually doing quite well at the lower end of the market. And even in places like Manila, the office market is going very, very well indeed, with the outsourcing business really leading the charge there.
Okay, and elsewhere, anywhere you'd like to highlight? Indonesia here, same sort of thing in Jakarta, is it? Or?
It's not quite the same in Jakarta, but certainly the low-end housing, the bottom end of the market is doing extremely well. The upper end perhaps is a little softer.